a blowout jobs report showing the resilience of the U.S. economy, but weighing on investor sentiment, at least for now. So how should investors be digesting a robust economy with slowing earnings growth? We want to bring in our very own Myles Udland here, head of Yahoo Finance News. Myles, how do you think investors and the street are looking? Obviously, they're not too excited, just judging by at least immediate reaction.
Well, I think the reminder, especially as we head into Trump's inauguration, where he really is all news runs through what the incoming president says about literally anything. What investors have been focused on and are clearly remaining focused on is the rates picture. And when you see a jobs report like this, you are again, and you saw it in the futures, in Fed futures this morning, we now are looking for one rate cut in 2025, none until June, and 6 months is a long time for investors to wait to get additional clarity on how the Fed might be thinking about their positioning. We saw, Michelle Bowman come out last night and say, I think we're all set here. I would have supported no cut in December. So the picture for investors who I think were looking to get excited about something other than big tech, where you are going to still have earnings growth kind of, at this point, the logic is regardless of the cycle. But, that S&P 493, the whole point there was, all right, we're finally going to get some relief on the rates front. If the economy is fine, but we have a little bit less pressure on our cost of capital, then we can start to look at those earnings. You can, put a turn of leverage on there and get, more interested in some of those stories. But, Sam Rowe, our old managing editor, was tweeting out this morning, this is the exact same setup that we saw in January of 2024. And I think investors were just looking for something different in 2025. But it really just feels like Groundhog Day for investors, where you have the economy overperforming, rate cut expectations coming down, and as a result, the balance of the market under some pressure, and you're looking at the same old thing. You're looking at crypto, you're looking at big tech, and I know that that's done well if you buy the S&P 500, but professional money managers don't get paid to buy the index. So they are trying to find other areas of opportunity. They haven't really appeared yet, and this jobs report makes that more challenging.
Which the core difference here between beginning of 2024 and beginning of 2025, to the point of where you started, is that we're going to have somebody different at 1600 Pennsylvania Ave or Mar-a-Lago. But the other thing here that we're anticipating, at least from FactSet, is this calendar year earnings growth of 15%. Do you think we're going to need to see some revisions to the downside on that?
Well, earnings growth is almost always revised down throughout the year. Of course, the impressive story in 23 is that it wasn't. In 24, it was revised down less than expected. So perhaps you do see that again in 25. What's interesting for investors is we're in January of 25. Really quickly, we're going to start talking about 27 and 28 estimates, because that's real. Because ultimately, what we're saying is, can you compound at 6%, 8%, 10% kind of earnings growth? That headline 15% number is obviously greatly impacted when you have the largest company, in the market growing profits. Last year we were up hundreds of percents, depending on the quarter you looked at for NVIDIA. So when you have that kind of skew, that headline number looks really good. But ultimately, under the surface, the question is, can you have a large swath of companies that are growing at GDP plus, and does this whole picture, what's happening with tariffs, what's happening with inflation, what's happening with rates, does that kind of support that for investors? And given how top heavy the market has become, I think the answer right now is that remains mixed, but it continues to be, Jared talks about it almost every day. It's an under the surface churn story. Whereas we can look at the headline indexes and say, I guess this seems fine. But there are plenty of ugly pictures, plenty of ugly charts out there, depending on where you want to look.
Right, and on the 3 to 5 year point, that's exactly what we saw with Delta as well, which I know we're going to get to in a hot second, so I don't want to front run that too much.
I was wondering if you'd bring it in.
I had
Came
to.
early.
Why not?
Didn't disappoint. All right, Myles, come back soon, will you?
I'm out. That's it. Great. Good to see you guys.